What's up, everybody? What's going on, folks? Welcome to the True Trading Group YouTube channel. My name is Michael Edward Paranati. I go by Michael Edward. I'm the co-founder and head trader of True Trading Group. In case you did not know, we were a Benzinga FinTech Awards finalist for Best Data Analysis Tool. That's because we take $5,000 to $6,000, the best damn trading and investing tools that are on the market today, and we bring them all together under one roof on one platform. That is the TTG platform. These are tools that give you more information, help you make better decisions, and increase your chances of success. Flat out, they give you an edge. Professional traders use them. Most retail traders don't. It's because they're so expensive. You're talking $5,000, $6,000 a year. Easy if you were to pay for it on your own. You don't have to pay for this stuff when you join TTG. It's all included in your annual membership when you guys do join us. But why should you listen to anything it is that I talk about on this channel? Simply put, I did not figure this out by watching YouTube videos, or certainly didn't do it by sitting in Discord chats. I began my trading career working for T3 Alpha Fund, my very first job right out of college, where they had me go through an educational training program before they let me touch $1 of the fund's money. Then 2008 happened, and then that was the Great Recession and the stock market crash. But it also was the same year that I received one of the firm's Trader of the Year awards. That's where I got my start in trading. I was trained by professionals on Wall Street. Our office was right on the corner of William and Wall Street. Okay, William Street and Wall Street. So I didn't have to, I was very lucky and fortunate. I didn't have to search through thousands of hours of YouTube videos and sit in the depths of Discord chats or Reddit message boards and try to sift through all the garbage that's out there and figure out who actually knows their stuff and who's totally full of crap. So this is why I think you guys should be paying attention to the stuff that we talk about on this YouTube channel. So if you have not yet done so, make sure you smash that like button, subscribe to the channel, turn on your notifications, make sure you guys never miss out on any of these YouTube videos or live streams. I do live streams on this YouTube channel about 5-6 times a week, where I go over, obviously we recap the day, what happened, but I also will stick my neck out there. I'm not a Monday morning quarterback. I'll tell you exactly what I think is going to happen tomorrow, next week, next month. I tell you positions I'm in, positions I'm considering getting into, and my thoughts and my analysis on the markets. Now, I don't think you should follow me and listen to the stuff that I say because I think I'm the world's greatest trader. I don't think I'm the world's greatest trader. I also don't have a 100% win rate. Matter of fact, there's 9 professional traders that are moderators that guide you through each trading day inside True Trading Group. We share our screens. We're live on the mic. We're calling out our trades, answering questions. We're with you for the entire day. The mods and I collectively as a group have been able to maintain a cumulative win rate of just around 80%, now going on roughly the last 4 years. So listen, I'm going to be wrong sometimes. I'm going to have red trades. I'm going to have red days. Of course, we all do. It's part of trading. But I'm right a hell of a lot more than I am wrong. And what I'm going to do here now for you guys today is share with you my thoughts on the Fed meeting. Fed meeting today, Jerome Powell came out and put the kibosh on a rate cut in March. Now, I've been telling you guys, this should not have come as a surprise today. I've been talking about this for the last month, really. When the market started pricing in the probability of a rate cut in March, I was very vocal about that on this YouTube channel about, I think the market's got that wrong. That I don't see there being any reason why the Fed would cut rates in March, because there's only 2 reasons the Fed cuts rates. They're going to cut rates because either A, inflation is back to 2%. B, the economy has completely fallen apart and we've entered a recession. Neither one of those things is happening right now. Neither one of those things even looks like it's happening anytime soon. Soon meaning like over the next month, 2 months. The economy still looks good. You still have the labor market. Sure, it's softening, but it's still intact. GDP numbers are still pretty good. Sure, that we're not, the booming economy like we were coming out of COVID, but the economy is still doing, for the most part, a hell of a lot better than people had anticipated it was going to do. Certainly a hell of a lot better than I anticipated that it was going to be doing at this time. And I've been saying that I think the market's got that part of the market wrong. And was behind a lot of this market rally coming into the end of the year and the start of 2024 was the market's really thinking and believing that we're going to get rate cuts in March. And the market believes that we're going to get 150 basis points of rate cuts in 2024. I think that is way too optimistic. The one thing that Jerome Powell and company does not want to do is cut rates too soon and then have inflation start to tick back up again. Because once that happens, if that happens, it's a repeat of the 1970s. And the only way to stop inflation when it becomes unanchored like that is to just absolutely crush the economy and not just have a mild recession, which is what, if we do end up having a recession, I do believe it will be a mild one, unless something like that happened and the Fed would have to purposely crush the economy in order to bring inflation back down. That's what Paul Volcker had to do in the early 1980s, and he caused purposely and intentionally what ended up being a double dip recession, where 1980 recession came out of it in 81, back into recession in 82. And it was a pretty vicious recession. It wasn't just a mild run of the mill, quick in, quick out. I mean, it was a pretty vicious recession. That's because inflation got unanchored. Jerome Powell does not want that to happen. They already made one mistake with the whole transitory. They do not want to have egg on their face for the second time. So Jerome Powell is going to be damned if he lets his foot off that brake too early. They're going to want to make sure that they see the white of 2% inflation's eyes before they start cutting rates. Now, they're not going to wait till inflation's at 2.0 to cut, because remember, there's a huge lag in monetary policy. If they wait until 2% to start cutting, then that means they've held rates probably for far too long, and they're probably going to push the economy into a bit of a mild recession. But to be honest with you, Jerome Powell and the Fed would much rather, if you gave them two choices, A, hold rates high for too long and cause a mild recession, or cut rates too soon and cause inflation to start to go back up again. 100 times out of 100, hear me now and hear me clear, 100 times out of 100, the Fed would rather have a mild recession, because it's actually quite easy to pull the economy out of a mild recession. They've got a lot of tools at their disposal. They can start cutting rates, they can ease off on the quantitative tightening, they can start back up quantitative easing. There's a lot of things they can do to pull the economy out of a mild recession. There's not a lot of options when inflation becomes unanchored. The only choice is to now rapidly raise rates way too high to crush the economy, cause a recession, to bring inflation back down. So trust me, they'd much rather hold too long than cut too soon. And that's why I kept telling people on this YouTube channel, if you followed my videos and my streams for the last month, that I believe the market has that wrong. And I think the market's going to be disappointed when the market does not get the rate cuts when the market wants it, because I think Jerome Powell's going to hold rates higher than longer. I've been saying that I think at the absolute earliest, you're going to get your first rate cut in May. That's what I think. That's what I still believe. Now, if the economy goes through some severe deterioration over the next month and a half, the next Fed meeting is March 20th. That's the next Fed meeting. So unless there's some severe deterioration over the next month and a half, which doesn't seem like that's the case, but I can't see the Fed cutting rates in March. I just can't. I think the first rate comes in May. You might even see them pause in June and then start cutting again in July. And then every single meeting from that point on into 2025, there'll be a 25 basis point cut until the Fed brings rates back down to around 3%, is where I think they're going to eventually stop and hold rates. Those are my thoughts on the Fed. But let's talk about what happened today, right? Let's talk about what happened today. You got a big pullback day in the markets, right? You can see this big, nice, strong red candle to the downside on the daily chart. And there's a couple of comments from Jerome Powell that really stuck. And it was, I don't think it's likely that the committee will reach a level of confidence by the time of the March meeting in order for us to cut rates. That's verbatim the words that came from Jerome Powell. He then said earlier in the press conference that rate cuts would likely begin at some point this year, but really didn't give any indication that those rate cuts are coming and they're coming soon. So stocks fell off to session lows as he kind of crushed traders' hopes that wanted the central bank to slash rates sooner before there's a recession. Because here's the thing. If the Fed just keeps rates up here over 5%, if they just hold here and do nothing, there will be a recession. So the whole point of this soft landing is the Fed able to raise rates, hold rates, and then cut rates and time that perfectly to not cause a recession? They've only been successful doing that around 20% of the time, right? About 80% of the time when they go through this cycle, and they go through this process, about 80% of the time, they cause a recession. The last soft landing was in the mid 90s when the Fed was able to raise rates, hold, and then cut rates and not cause a recession. So we'll see if they're able to pull it off again. The economy certainly feels like it's strong enough to do so, but this is why the markets gave you this big pullback today, right? It's because of these statements from Jerome Powell. Okay. What I think this means from us now going forward is I think you're going to have now a couple day overhang where we can get a retest of the previous all-time high. So when I take you guys out here, this is a chart of the SPY, you will notice this was your previous all-time high from the end of 2021 and the very early days of 2022. That was your all-time high there in the SPY. We cleared that level out. You can see we got right back up to that level here in the very beginning of January and the very end of December, and we found resistance. And then you broke through it here just a couple of weeks ago. So there's your breakthrough just a couple of weeks ago. Bang, broke through it, never pulled back to retest it. Now that Jerome Powell kind of put the kibosh on that March rate cut, I think we're clear to go back down and retest that prior all-time high. So I am going to be looking to try and fade bounces that we're going to get. Now, I think that this first pullback, I think you're going to try to get a bounce from this because everybody for the last 3 months has been trained by the dip, right? Everybody's been trained to buy the dip. So I would not be surprised if you tried to get a bounce attempt tomorrow. I would not be surprised. But then I think that sell-off then continues to the downside. So here's the deal. Tomorrow, you have Apple, Amazon, and Meta earnings after the bell. Here's my thoughts. From a technical standpoint, the markets maybe try to bounce tomorrow at some point. Then Amazon, Apple, Meta. If you get any type of a disappointing earnings report from those companies, anything like you had with Alphabet got its head taken off today, right? Let's take a look at Alphabet today. Blah, down 7%. Microsoft, okay, you can see a big reversal there on Microsoft. AMD traded to the AMD actually had a nice recovery at the end of the day, though, actually, to be quite fair. AMD had a nice recovery into the end of the day. But you're talking about big mega tech names. You take a look at Alphabet, big move to the downside. If you get a move like that on, let's say, maybe Amazon or Apple, folks, at that point, then I think it's an absolute no-brainer. Then the market sells off after the bell with those earnings, and then you continue that weakness Thursday. Continue that weakness, on Friday. Okay. And you're going to get the U.S. labor report on Friday. So we're going to find out what's the new unemployment rate, how many new jobs were added. We're going to get all that information on Friday. This volatility you saw today, make no mistake, this is just the beginning because we still have massive catalysts coming out this week. Yes, of course, the Fed meeting is, a 5-star event in the markets, meaning it's going to move the market. It's a huge catalyst that causes price swings and therefore gives us opportunities as traders to make money. But you still have Apple, Amazon, Meta earnings after the bell tomorrow, then the U.S. labor report Friday morning. So I'm thinking that maybe the markets try to bounce, then we maybe pull in after those earnings, and then you get that follow-through weakness. We go down and we test 479, 480 on the SPY, and I'm looking to be short going into the end of this week. Okay, looking to be short going into the end of this week, and I'm going to target the mega cap tech names. To be honest with you, I'm probably going to try to stay away maybe from the semiconductors. And semiconductors have just been so damn strong. But I feel like Apple's been weak. Tesla's been weak. We shorted Tesla today inside of True Trading Group. Tesla's been pretty weak. So between Tesla, Alphabet, Apple. Looks like you have a topping reversal there on Microsoft. We take a look over at that Microsoft chart. Looks like we kind of put in this little bit of a topping tail there on Microsoft and a nice big reversal. So maybe a little bit more downside to come there in Microsoft. I think Microsoft maybe can get us back down into the 380s. Stock now currently trading 398, 399. I think we can see that back in the 380s. But again, maybe a bounce attempt first. And then let's see if we get that follow through, we get that trade to the downside. Guys, do not try to trade through this environment on your own. We actually had, Geo, one of our moderators, I just typed Geo in chat, one of our moderators in True Trading Groups, like I said, there's 9 professional traders that are with you. And one of our moderators, Geo, all he does is trade the SPY, options. He just trades options on the SPY all day long. He's been doing this for over 25, nearly 30 years. He's actually a former market maker. True professional. And leads our members through. Any of our members that trade SPY options leads our members through that. Also, people that trade futures on the S&P as well, or the minis or the NASDAQ futures. Very, very similar, right? But anyone that trades those had a monster afternoon today inside of True Trading Group with that. Just huge swings, huge moves. You're talking about the SPY shot to 49 and then dropped all the way down to 43. It's a 6-point move on the SPY. You're talking 60 points on futures. Just a huge move. And members absolutely ripped this into shreds, just absolutely killed it. Also, the weakness in the solar names continues. Shy, another one of our pro trading moderators, just ripped that thing to shreds on the short side. But honestly, she's been short, guys, for the last, for the last whole month. She's just been shorting end phase. And that stock's just been rolling over and just been an absolute ATM machine for members in TTG. And you got a huge move from 112 all the way down to 104 into the close. And there were just two, really big trades for members inside of True Trading Group today. And this volatility just continues to print money. And I can't tell you guys, I really can't express enough. I know it's tough for you just to believe the words that I'm saying. Like, oh, yeah, you guys killed it today. I'm sure anybody can come on a YouTube video and say that after the fact. I get that. I understand. I don't think you should just take my word for it, which is why I'm going to invite you to just see it for yourself. See it for yourself. Don't just take my word for it. You shouldn't take my word for it because who am I? I'm just a guy on a YouTube channel, right? Who cares? I told you I worked at a fund in New York City. Yes, great. All true. I received a Trader of the Year award. Great. Yes, it's actually right there. Yes, all of these things are true, but none of these are the things as why you should just listen and believe all the things that I'm saying to you. I'd much rather you come inside of our platform, come inside of our community and see it for yourself. Join our trial membership. We have a trial membership. It gets you 7 trading days with us, not 7 calendar days. So don't worry. The weekend doesn't count against your 7 days. It's 7 full trading days. You get to come and chat. You get to download our mobile app, be connected even when you're not in front of your computer. We have over 10,000 members into your trading group in 115 different countries. 82% of them have full-time jobs and work over 40 hours a week. The others are full-time traders or they're just retired, right? So the way that 82% of our members that have full-time jobs are able to follow along with what we do is because A, we're not scalpers, we're not in and out within seconds. Our day trades last hours, our swing trades last days, okay? So you're able to just download mobile app, and you'll be able to see the screen share, listen to the audio commentary, and most importantly, get real-time push notifications when our mods enter and exit positions without delay in real time, okay? Do yourself a favor right now, before this week comes to an end, before these earnings come out, before the U.S. labor report, and before you miss out on some amazing money-making opportunities with this volatile market, go to ttgthree.com. That's TTG3 spelt out.com. Enter your name, email, phone number, then click yes, I want this, fill out the form, pay $3 and get your butts inside chat. Now, I know what you're thinking. Oh, $3, here's the catch. There's no catch. Why do we charge $3? To make sure that you're just a real person and you're serious about this. It's a one-time payment. There's no automatic renewal. There's no automatic upgrade. We don't play any games like that. We maintain a very high quality chat room. There are thousands of people on our platform at any given moment during the day. I do not want someone coming in there and spamming chat, being disruptive and distracting and taking away from the quality and the integrity of that chat room that we run. So by charging $3, it makes you put in your credit card. It shows us that you're a real person and it shows us that you're actually serious about this and you're as serious about this as we are. So again, it's a one-time payment. There's no automatic renewal. After your 7-day trial, it just expires and you're never charged anything ever again. Okay? So go to ttgthree.com. That's TTG3 spelt out.com. Name, email, phone number. Yes, I want this. Fill out the form, pay the $3. Get your butt inside chat. It was a huge day for members inside True Trading Group, guys. Markets got hit pretty hard. We were on the right side of that move. We've been talking about not expecting rate cuts in March. We were ready for this move to the downside. We were ready for the markets to be disappointed. Were you? I've been talking about this for the last several weeks, about the market being disappointed about not getting rate cuts in March. Jerome Powell basically just told you today, we're not cutting rates next month. Maybe that changes by March 20th. But as it stands today, with what he said, no rate cuts in March. The market now pricing that out. And that's why you got to move to the downside of the markets. So tomorrow's going to be a huge day. After the close, Apple, Amazon, Meta earnings. Be there with me live. Take advantage of this opportunity. Then Friday, 8:30 a.m. Eastern, U.S. labor report. We're going to get the new unemployment number. I got a feeling that unemployment number is going to have a 4 in front of it. Let's see if I'm right. I'll give you the whole game plan. I'll be breaking it down. I'll be trading it with members live. Be part of it. Don't do this stuff on your own. Come join us. Experience what it's like to be part of our community. Ask questions. Talk to members. Talk to the moderators and the pro traders that are in there. And who knows? Maybe you guys can catch a triple-digit banger on an option play that can get you guys maybe enough to even join the full annual membership if you guys want. Either way, just come see what it's about. This way, you don't have to believe the words that I'm saying. Rather, you can see for yourself the actions that we take. TTGTHREE.com. Get your butts inside chat. I'll see you all there. Have a wonderful rest of your evening, guys. Subscribe to the channel. Smash that like button. Turn on your notifications if you haven't done so already. Never miss these videos or the live streams. I'll see you guys later.